Welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, it's that time of the year again when you rummage through your inbox for that Form 16, desperately trying to call your tax advisor, only to find his line perpetually busy. Yes, it's tax season, and the deadline to file your taxes is here. This episode of Money, Money, Money is for all those last-minute folks who are yet to complete the task. Well, we're here with the Money, Money, Money Simple Tax Filing Guide. My guest on the show today is Parizad Sirwala from KPMG and financial planning expert Harsh Roongta. Thank you so much, Parizad and Harsh, for joining in. So yes, this is a quick checklist sort of a show. So, what you need to do and what you need to avoid doing in order to file your taxes. So I thought, Parizad, maybe we can start with the basics.
Yeah.
First, knowing what all comes under income, because as salaried individuals, we tend to think Form 16 salary, we're done. But that's not the case, right?
Right. So actually income is a very inclusive definition, Surbi, but it depends on individual facts of the case. But yeah, broadly the categorization of income largely falls under 3-4 buckets, which is typical for any taxpayer, which is your salary income. If you have property, then either your rentals or your deemed to be let out property income. If you have investments and you realize gains, then capital gains, and then your other residual sources, which is your interest, savings bank interest, fixed deposit and the likes broadly. And if you're earning engage in business and profession, then there would also be the element of your professional or business income. Largely these are the heads of income under which you can typically fit in.
So let's just quickly go over them
Sure.
in some more detail. So salary is fairly clear and it's simple.
Right.
But when you're talking about interest income, there is an element of deduction which the bank also does on your fixed deposits or on your savings bank account. So how do you know what is the residual amount and what your tax liability then is?
When you have elements of income like interest on fixed deposits or any other item, say your rent which is subject to certain tax deduction at source payments, one has to factor in mind that the TDS rate could be 2%, 10% as the case may be, but your individual tax rate as an individual you're supposed to be paying taxes on depending on the slab of income. So you may have some incremental catching up of taxes to be done when you're annualizing your total income and not really rely only on the TDS that has been deducted.
So what's your experience, Harsh, when you are advising clients on preparing their IT return? What are the areas that people tend to miss out then? And specifically talking about the different types of income, how do you go about advising people particularly on property and the rental income aspects?
So I think two things. As Parizad was mentioning, people confuse TDS with their tax liability. So TDS is just an advance and an ad hoc deduction. So I mean, there are clients who will say, we don't file tax returns because we don't need to file tax returns. And you ask them why you don't need to file tax returns. He says, from my salary, the TDS is being deducted. From whatever interest on bank FDs, my TDS is being deducted. So where is the question of any additional tax liability? So I think this is one thing, that just because tax is deducted at source does not mean you don't have to file returns. You have to file the returns if your taxable income is more than 2.5 lakhs.
So, all right, Harsh, Parizad, I want to talk about housing in more detail as well in a bit, because it's very clear when you own one house, you live in it, then you're completely clear from the tax standpoint. But it starts getting a bit complicated when there is a second house and when whether it is let out or not let out, if there is any notional rental income. So let's start by understanding some of those aspects. What does the law say? What do I need to pay if I do own a second house, Parizad?
Yeah, so if you're fortunate enough to own more than one house property basically is treated as self-occupied and it's tax exempt, okay? More than one house, your second and subsequent house, if you're the owner, then it is actually irrespective of whether if it's rented, then actual rental income, and you compute the provisions as per income from house property. Even if the second or subsequent houses are lying vacant, idle, which is not rented out actually, what very often people forget is that India has always had deeming provisions for taxation. So if the second and subsequent house, even if it's vacant, you impute or deem the rental value and it is subject to tax in your hands as a notional rent.
How is this deemed rental income computed? I mean, how is it arrived at if the house has not actually been let out?
So the onus is on you. So you either get a valuation done or a property in your neighborhood. If that is rented, what is the actual rental value? So basically, it's a property in an equivalent neighborhood and how much rent it would command. That should be the deemed annual rental value.
Okay.
Yeah.
So Harsh, in that case, what do you advise clients who do have the second house, and specifically in cases when the second house has not been let out, so there's actually no income generation from that particular asset? So what's the advice there?
So it's very ironical because sometimes the very fact that the house is vacant, so you have to take the deemed rental into account. But because you treat it as deemed rented out, the interest that you might have paid on a loan that you had taken to acquire that house, the entire interest is treated as deductible, total, right? There is no limit. So people have this notion that the interest on home loans is deductible up to 2 lakhs. Now that is a figure for self-occupied property.
Yeah.
There the rental is taken as nil and then the interest is allowed as a deduction, but the cap is 2 lakhs. So the maximum loss from a self-occupied property is 2 lakhs.
Okay.
But moment it is either an idle property, in which case you take a deemed rental, or an actually rented out property, the entire interest is allowed as a deduction. So just to, typically today the rental on residential houses is running at roughly 2%, right? Home loans are roughly say 10%, right? 10% on say 70% of the value, so roughly 7% of the capital value. So 2% is the rental value, 7% is the interest deduction. So you would always have a loss.
So we'll take a break on that note. We've gone over some of the income heads, but then there are several others remaining. There's of course capital gains. So in case you've been lucky enough to make certain capital gains, how is the tax treatment there? And of course for those who are self-employed, what are the things you need to keep in mind? Lots more coming up. Don't go away. Welcome back here with the tax filing special on Money, 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 and we're in conversation with Parizad Sirwalla and Harsh Roongta. So to talk about some of the other income categories, we've done salary, we've done bank interest, we've done income from a second home. Now talking about capital gains, Parizad. What all do you need to keep in mind? Because capital gains can be in the form of shares. It could perhaps also be in the form of debt mutual funds.
So capital gains largely it is sales proceeds minus, as you said, the cost of acquisition, which could be indexed to a particular inflation index. And if there is, in terms of expenditure, anything that basically is to the cost of improving the asset, or a direct expense which goes into the earning of the capital gains income, and there's no common yardsticks for that, so it depends. So for instance, if there are certain brokerage charges or portfolio management fees that you pay, there could be certain judicial precedents around that getting added to your cost of acquisition as well to offset your sales proceeds, and the net income is the capital gains or loss, as the case may be.
So Harsh, when you're advising clients, is capital gains is sort of a big component, or because for those who are holding equity for more than 1 year anyway, they don't have to worry. With debt, again, this indexation phenomena comes into play. So how significant is capital gains as a category when you're advising clients?
So I think capital gains on debt mutual funds is something that happens to a lot of people, and indexation only helps you reduce the rigors of capital gains. I mean, it increases the cost.
Yeah.
Okay, so typically there would still be some capital gains probably left over to be
so some minor
offered
tax will have to be
minor
paid,
tax would have to be paid.
Yeah. There are standardized deductions and we all look forward to them. There are not too many, but anyway, let's go over the checklist. So ATC, what are the sort of quick fire sort of heads that one can keep in mind?
So your LIC premiums, your repayment of house loans, tuition fees, if any, largely you name it, Provident Fund, PPF, you name it, and it all comes under ATC, right? Every year we keep talking, even during budget season.
Hoping that limit is going to be increased or unbundled.
It's a crowded limit, largely, by the end of the year, by March, most of the investments you would have given your employer as declarations. So that is one so-called famous deduction that mostly everyone has. If you have any donations, then there are certain prescribed deductions under ATG. then your health insurance premiums,
Sure.
medical
I actually
premiums.
want to spend some time understanding
Yeah.
the donations aspect and health,
Sure.
because a lot of people are now buying insurance.
Right.
So therefore, perhaps there is something to sort of, take home there. But on donations, what is the advice and what are the kind of tax exemptions that one can look forward to if one is making a charitable donation?
So, I mean, donations, there are two categories. Those donations that are eligible for 100% deduction, and those donations that are, and most other donations which are eligible for 50%.
Okay.
I think in the 100% category, you have just have a couple of notified funds like the Prime Minister's Relief Fund and Prime Minister's Disaster. There are a couple of government funds into which if you donate, that's eligible for 100% deduction. All the other regular charitable trusts to whom if you will donate, that typically has a 50% donation limit. I'm not going into the overall limit etc. that exists simply because I don't think most people donate that high a percentage of their taxable income. So if you're donating a very high percentage, there is also an overall cap.
Absolutely important point. On deductions, last point on health, Parizad, there is of course the deduction you can get on the Mediclaim premium that you're paying for yourself.
Yeah.
And then it also extends to family members.
That's correct.
And there's a separate section which talks about whether you have a dependent disabled person in the family perhaps, or a close relative. So just take us through what are the sort of deductions there.
Right. So if you're paying medical insurance premiums for self and your family, then yes, there are annualized limits of around 25,000 per annum. If you have parents who are senior citizens and you're paying premiums on their behalf, then the limit increases to around 30,000 per annum.
So for parents it's 30,000, for self and family it's 25,000.
Yeah. Okay. And that is if you're paying the premium for yourself and family and your parents. What happens is that sometimes, you have a case of a family member who's suffering from a serious illness, and there are prescribed illnesses prescribed actually in the income tax subject to certain procedural formalities. But you do have certain threshold amounts for medical treatment of either disabled people with, permanent disability, partial disability, things like blindness. See, there are certain sections in the Income Tax Act which allow those deductions. Of course, there are procedural formalities also prescribed.
Okay, so worth to keep that in mind, just in case you have these situations at home, then you would want to look at those subsections and take the tax advantage at least while it is available. We'll take a break on that note, but on the other side, the things to keep in mind, the mistakes to avoid, and a very quick checklist for the self-employed. Don't go anywhere.